Let's learn how to draw supply and demand zone using pin bar as a basing candle. This is a very broad chapter. If you know how to draw demand and supply zone, you're going to be the best in trading. So look at that candle. This is the body of the candle. We call it the body of the candle. That's the tiny wicks. That's the wicks. So we have two types of pin bars. We have bullish pin bar, we have bearish pin bar. And let's dive into bullish pin bar. The pin bar forms, remember that these pin bars forms either at the upper or lower base of a chart. It must be at the extreme. So you see the way I mark it, the upper one, this is the bullish one, and anywhere you see it in the chart, you will know that price is reversing towards the upside. But you will wait as you draw the up one, you draw the other, that gives you your demand zone. But always wait, there's another part of it. Once you finish drawing it like this, you wait for price to come back and retest it. Look at this example here now. So this is a continuation pattern. Price is moving in an uptrend. Look at the pin bar. You see the way where the price is situated at. So you draw from the upper one to the right. See, look at the retest. Price retests it, taps through there. So look at it here. Price retests it. Another example. This is another pin bar. Price retests it and move up. So this is the pin bar. This is your demand zone. Once you draw the shadow up and down, it gives you your demand zone. That's your demand zone. So, and you wait for price to come down and retest it. You wait for price to come down and retest. Very important. You see that your price market start moving in your favor. This is a very repeatable strategy. You go to another. This is a continuation pattern. As you can see, you look at the extreme low. You see a pin bar. You mark the up and the low. Then you wait for retest. After the retest, you see how your price starts moving towards the upward side. So let's look at the bearish pin bar. The bearish pin bar denotes the reversal towards the downside. Denotes the reversal towards the downside. Anywhere you see it, the wick is an inverted hammer. We can still call it an inverted hammer. You see the way the wick is long. Bullish one is long. Then look at the body, the opening and the closing. Then you mark the up and the down. Then once you mark it, you've gotten your supply zone. So let's look at it on this chart. See that price was going into consolidation here. You look at here, look at another bearish pin bar. You mark the low, you mark the high. It will give you your supply zone. Then you now wait for price to come back to it and retest it. And once price retest it, you see that market start pushing down. So that's a valid supply zone. Let's look at another example. This is a downtrend that's been moving towards the downside. You see it, there's a consolidation, push down. Then you now see your bearish pin bar or inverted hammer, you can call it that. Mark the upper one, mark the lower one. You wait for price to come back to it and retest it. Then you see how price push down. So it's a repeatable strategy. You go to your charts and start spotting them out. Look at for more examples before diving into it. Thank you very much.